Well, guys, we have some great news to celebrate this week. Not only have mortgage rates dropped, but home prices have dropped too. Welcome to the Los Angeles Real Estate Roundup for July 15th, 2024. I'm Jon Schwartz, an agent, investor, and house hacker in Los Angeles, California. Let's get into the numbers. Right now, we're looking at the last year's worth of the average 30-year fixed mortgage rate as reported by Mortgage News Daily. We peaked around 8% back in October, came down to the mid-sixes in December, peaked again recently in April, around 7.52%. But what I want to focus on is this recent decline right here. So check this out. 2 weeks ago, on July 1st, we were sporting a 7.13% mortgage rate. This week, as of July 12th, 6.82%. Mortgage rates are falling. Mortgage rates are falling. Mortgage rates fell on very good inflation news this past week. Specifically, CPI fell 0.1% month over month. Also, the spread between a 30-year mortgage rate and the 10-year treasury yield is shrinking. That's also bringing rates down. I linked to a great article about that in my weekly newsletter, which you can subscribe to at www.househack.la. My weekly newsletter covers the numbers, the headlines, and the market finds that you need to know about as a savvy LA homebuyer or seller. Let's get back to the roundup. But it's not just mortgage rates we're excited about. We're also excited about the median price of a home in Los Angeles dropping this week for the first time in 4 weeks from $929,000 last week to $926,000 this week. Now, this isn't a huge drop in pricing, but we may have passed the peak. We may have hit the summer high last week, and now we're on our coast downward. As further evidence of that, I point to the median price of a new listing in Los Angeles, which has now declined 2 weeks straight. 2 weeks ago, the median listing price of a home in LA was $971,000. Now it's $946,000. That's a $25,000 decline in 2 weeks. Why? Well, if you ask me, it might be that sellers, i.e. their real estate agents, are beginning to feel the pressure that's been mounting over these past few months as inventory has been rising, as price drops have been rising, and are now bringing homes to market at a more reasonable price, anticipating more reasonable pricing as the year proceeds. Speaking of new listings, let's take a look at that. So now we're looking at new listings data from Redfin, and as you can see, we had a pretty marked decline this past week from 1,521 new listings on the market last week to 1,383. We also had a big drop in terms of the year-over-year growth from 17.2% to 11.4%. That's a huge drop, but this was actually an anomalous and unusual week for new listings because this is the week that ends July 7th. And of course, in the week preceding July 7th, you have July 4th, and July 4th is a time when people are doing things outside of selling their houses. So we did have a significantly lower number of new listings this week, and that did have an impact on overall inventory. When we look at active listings for the week, we again have a decline from 14,459 last week to 14,337 this week. However, this is not actually a story of dwindling supply, and we know that by looking at weeks of supply. Weeks of supply is a metric that balances supply versus demand, and you can see this week it actually grew from 13.5 weeks of supply last week to 14.2 weeks of supply this week. That's actually one of the largest single week upticks we've seen all year. So the TLDR here is, during the week of July 4th, hardly anybody wanted to list their house, but also hardly anybody wanted to go out shopping for a house. So overall weeks of supply grew. We'll have to see how listings rebound in the week or two to come. However, there are still some veins of strength in this housing market. Let me show you what I mean. The percent of active listings with price drops fell for its first time in 3 months. The percent of active listings with a price drop fell from 4.4% last week to 4.1% this week. And there's more. Now we're looking at the percent of pending sales that went off market in 2 weeks or less, and this metric has continued its 5-week growth streak. Right now, 32% of homes that are pending went off market in 2 weeks or less. That's a third of all homes that are pending sale. And what's remarkable is that this same week back in 2021, we were at 31.8% of homes pending going off market in 2 weeks or less. And guys, remember, 2021 was a crazy year. a red-hot year when home prices went up 15%. So here's what I make of this data and also what I'm seeing anecdotally in the market right now. We're probably at or just past the summer pricing peak. Prices peak in the summer, then they decline all the way until they bottom out in February, and then they rise again to peak in July or August the following summer. So buyers entering the market now are going to experience a little bit of a discount just because of the natural pricing cycle of homes in the Los Angeles and national housing market. At the same time, rates just dropped a little bit. So home buyers are going to feel an additional discount from that. And I think these discounts are going to work hand in hand into the fall and winter. But here's what's going to happen. As we get into 2025, and especially the 2025 spring buying season, there's expectation that rates will have dropped even lower, say to the low 6s or high 5s, i.e. to a low enough point that it starts to pull a lot more buyers into the market. That's going to put upward pressure on pricing. Low rates are great, but once they get low enough, more buyers are going to flood the market, and that pushes prices up. And just as that's happening, we're probably also going to see the beginning of the spring 2025 buying season, which again is when cyclically prices start to go up again. So I think we're just beginning a period that's really going to be a good time for home buyers. Not exactly a buyer's market, but it's never a buyer's market in Los Angeles. But between now and February 2025, I think rates will be low enough to give home buyers a sense of a real discount without pulling tons of more home buyers into the market. And also prices are going to be slowly softening as we get into winter. This is just a prognostication. So much depends on inventory, and we really need to see if inventory is going to rebound next week. Subscribe and hit the bell icon so you don't miss next week's roundup.